7 reasons why cheap housing is hard to find. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee and let's have a look at this article from Domain, which is giving us 7 reasons that show why it's so hard to find cheap housing right now. So is this just more of the FOMO? Or let's have a look if they're discussing similar things to what I mentioned in a previous video, just discussing, well, all the government stimulus that is juicing up the property market. So let's have a look at this one. Despite warnings of the biggest recession since the 1930s, Australia's house prices barely fell this year and are already rising on the back of rock-bottom interest rates and unprecedented stimulus. Yes, that's the problem. You know, the market wants to adjust. It wants to reach a natural level of equilibrium, but government interventions won't allow it. It's that simple. And how does the government fuel this stimulus? Future generations bear that burden. Isn't it awesome, guys? Isn't it awesome? It's kind of unfair. So while the lucky country managed to come through this crisis with the economy in better shape than initially feared, many home buyers have been surprised to find that a downturn doesn't mean a discount. But why are house prices seeming to defy gravity? Here are 7 graphs that explain it. The interest rate drop. Well, yeah, we've discussed that in a previous video. The cash rate. Remember when 3% was considered an emergency rate, everyone. Now we're at 0.1. You've got banks' introductory, special bonus saving rate from the CBA is 0.55. Inflation is 0.7. You're literally losing value with the interest that you're getting from the CBA. Isn't that awesome, guys? Essentially negative rates. So interest rates have been slashed to rock bottom levels this year as the Reserve Bank tries to support the economic recovery. Although banks have not passed on the entire cut, homeowners can get fixed rate deals as low as 1.99% per annum. The drop in interest rates has been larger than people realise, ANZ senior economist Felicity Emmett said. People have switched from variable to fixed, so they're getting a very significant decline in interest rates. This can mean people can borrow more. Well, yeah, it's been big. Home buyers then turn up to auctions with a bigger budget, bidding up prices. Yes. So, home lending has soared. New loan commitments, total housing. So there you go. I mean, that's investors, owners. Owners are fueling it. A lot of them are first-home buyers. So they've talked about the low interest rates, very good. Home lending to owner-occupiers is going up. The amount of money lent to buy homes or refinance has been rising, reaching record high in October. Although it can still be challenging to get a loan approved, with buyers needing to prove they have a steady income and good control over their expenses, banks are willing to lend, especially to low-risk borrowers. Again, the Reserve Bank is helping. It has offered up to $200 billion in cheap money to commercial banks to help them lend to small businesses and keep mortgage interest rates down. Yeah, and there's no mention of the QE that the Reserve Bank is doing, but still, I mean, I guess some businesses will borrow. I can't imagine who in this climate. Maybe if you've got secure work. So the job market is improving. Well, no, it hasn't. We haven't reached those levels, but it's to do with confidence, everyone. It's just to do with confidence. Despite a sharp jump in unemployment, when state and federal governments put the economy into hibernation to slow the spread of the pandemic, workers are starting to return to their jobs as the economy reopens. Well, not really. Not really. We still have... How many? There you go. You've got nearly 1.5 million people or 1.4 million people on JobSeeker. You've got, over 225,000 on youth allowance and 150 on other youth allowance. That's shot up, everyone. 1.5 million people. You've got JobKeeper. You've got, what is it? Oh, that's public sector employment. That's virtually too. You got up to 9% in some states. 8.76% of people employed in Victoria are on JobKeeper, everyone. JobKeeper has surged up to over 900,000 people from 863. These are businesses that could be zombie businesses, everyone, that are being propped up by government support. Now, would you invest your money in a business that you know is going under? Well, actually, no, it's Clown World. People are investing in Airbnb, buying out all the venture capitalists, hoping to sell to someone for a profit for a business that's never made a profit itself. It's a crazy world. The fundamentals are out the window. So despite a sharp jump in unemployment, we read that. We did think that the labour market would be much harder hit than it has been, and it has also recovered much more quickly than we expected. Well, wait till trading while insolvent disappears. Then we'll see the real impact on the labour market. That's going to happen soon. Bankruptcies are half of where they should be. You may think, oh, fantastic, the economy's going well. No, that's during normal times. They've changed the rules. Their government is chucking money, propping up these businesses. They haven't really mentioned that, have they? Well, maybe they will. They've got 7 points. The labour market has been very unevenly affected, and people who either own homes or aspiring homeowners haven't really been as badly affected as people who rent. So disposable income measures. Although wage growth is low, some workers who have kept their job have rising disposable incomes. Tax cuts in the recent federal budget are boosting take-home pay, with CBA estimating a full-time worker on an average salary will get a 1.6% pay increase in fiscal year 2021 without any change to their wage due to lower taxes. There you go. That's just one thing to think about. Wage. You want your take-home pay up? Lower taxes, cut services. But will there be the political will for that? It's difficult. Some households have saved money by not being able to travel overseas or dine out as much. Households have saved almost $119 billion over the past year, part of which could flow into property, pushing prices up. Oh, I bet you it will. First home buyers got a break. So first home buyers have been rushing into the market this year armed with grants and discounts, or bribes really, in the biggest buying spree since a tripling of first homeowner grants in the GFC. Stamp duty discounts for lower-priced properties were already on offer in some states, with Victoria recently announcing further tax discounts and New South Wales planning a move away from stamp duty to a land tax. That's a terrible idea. I understand why they're doing it, but it's gonna come and bite you in the end, guys. Buyers have been taking advantage of the federal government's first home loan deposit scheme to buy with a discount as low as 5% while avoiding lenders' mortgage insurance. So mortgage holidays have helped. I mean, that's just insane. Who would have thought that? I mean, that's completely unnatural. Who would have thought that would happen? Stimulus introduced at the height of the crisis has been working. Borrowers who lost work in autumn were able to defer their mortgage payments, avoiding a wave of distress selling that could have pushed property prices down. The JobKeeper and JobSeeker payments have also helped keep households afloat. Sydney buyer's agent Michelle May had inquiries early in the year from opportunists looking to pick up a bargain. They were telling me, I'm only buying if I can get this kind of return or this kind of discount, the principal of Michelle May buyer's agent said. But bargains are thin on the ground, she says, compared to the previous price downturn of 17-18. Yes, because of all of the insane intervention in the market. Vendors who didn't have to sell simply held on, and the same thing happened with COVID. And that's what is primarily driving this increase in prices, she said. Now buyers have realized discounts are unlikely as they turn up at open homes with queues to get in or attend auctions such as a recent Inner West sale with 22 registered bidders, leading to a fear of missing out, she said. I see a lot of frustration and dread and FOMO. FOMO is what's fueling this. It's all the psychology plays a huge part in the economy, everyone. It's more important than reality in many ways. Just people's perceptions and fears driven by media and politicians, and then you've got interventions into the market. Well, so prices have ticked up. Home values are now ticking up in every capital city, even Melbourne, after its long lockdown. November data from CoreLogic shows. It follows the September quarter Domain house price report that found house prices in every capital city except Melbourne were flat. A string of economists have upgraded their forecasts and no longer expect to see price drops of 10 to 15%, instead tipping prices to lift. Ms. Emmett said there is a risk that the end of fiscal stimulus over the next few months could put pressure on the market, along with low population growth and elevated unemployment. So the risk is it could be a dead cat bounce. We could see, prices could rebound up and then continue back down. That could be the dead cat bounce. But how can you tell? Look how much they've thrown at it. Right now, what is the cash rate? 0.1. Wait, maybe next year we'll be going, remember when 0.1 seemed low and now we're at -3? What's going to stop them? They don't care. Housing affordability has been a political issue for years. This was a mechanism to correct it. Right there. Big hit to housing. A lot of people would have been hurt. People would have been kicked out of their homes. Property geniuses would have lost their investments. But the government swooped in and did whatever the bloody hell they could to keep it going. They don't give a crap about housing affordability. They give a crap about buying votes and keeping their jobs. It's the problem. On the upside, there does seem to be a lot of momentum. We've seen auction clearance rates. I don't care about auction clearance rates. This is creating very positive sentiment, and it's possible there is an element of FOMO re-entering the market. So what do you think, everyone, about these proposals? No mention of trading while insolvent, which is one of the biggest concerns. No mention, but still. What do you reckon? It's the FOMO. What else could the government do? What will we see next year? The real test is when the support mechanisms are removed. When all the job keepers, job seeker bonuses, when the trading while insolvent, when all of that is removed, then how will the market react? When banks no longer give mortgage holidays and start to foreclose on properties. We'll have to see. As always, guys, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. Use our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heiser Says or Teespring, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you all next time. Bye for now.